The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 23rd. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means that we can find the gift in every set of circumstance. And, folks, that's what we're going to do today. We're going to go check out the markets. We're going to go figure out what the Bulls and the Bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. You can call right now, 877-927-6648. Internationally, 727-445-1044. Feel free to send me an email, steve@tfnn.com. Inside that heading, make sure you've got something big and bold so I can catch it right away. And, of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Tango Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading up 37 points at 20,932. S&P's up 4 points. She's trading at 2398. NDX 100 is off. It's in red, believe it or not. It's trading out at 5696. Russell 2000 up a point. Semis are off 7 points. New York Stock Exchange up 22 points. As Artie Johnson would say, very interesting. Although he would say it much better than I did. NASDAQ Composite up a few. Wilshire is up 19. Trannies are up 0.5%, up 41 points. Volatility index, the spot volatility index, down 12 pennies, trading out at 1081. Gold is back $8. It looks like there could be some trouble in River City. We'll go take a look at River City. Silver's down 10 cents. I think there's trouble in River City there, too. Straight out at 1708. Lights Recruit up 13 pennies. So the upside out here, individual stock-wise, you got Global Sources LTD up 48% or $6. Interesting. Intuitive Surgical having another nice day to the upside, up nearly $6. Mercado Libre up 5. Transdigim Group up 460. McKesson up 375. Stamps.com up 370. To the downside, and really taking it in the shorts, is AutoZone off $56, nearly 8.5%. Alexion Pharmaceuticals down $11 or 9%. Nordson Corp $8 to the downside, 6%. Chipotle off $6. About 1.25%. O'Reilly Automotive not really doing too bad considering the just the demolition, the way that, how about just simply the way AutoZone is trading. But it's off still 566. Advanced Auto Parts is down 475, which is 3% to the downside. But no 8%ers out there. So what do we want? I took a look at the emails just before I came on. Didn't see any requests out there. I don't see anything inside the Tiger's Den. I mean, see people inside the Tiger's Den, but no requests out there. So let's begin by taking a look at, and this is really, when I say on the Artie Johnson call, this really is interesting. Really interesting with regard to what the market is doing. Now, many of you may recall that I, months ago, was looking for a top to form on May 19th to May 22nd. What is today? May 23rd. And last week, after we saw that little flush in the toilet to the downside on Wednesday and all those other activities there, we knew that there was a bottom that was forming, just too many signals, and we've seen a nice, healthy bounce. But now we're really getting close to that point in time where I haven't really budged at all from only thing I've budged on is the day in which that signal might generate itself. And so that's why I say it is very interesting. Unfortunately, for both you and I, we just have some conflicting signals out here. So let's go take a look at a couple of them. Well, first, let's take a look at this chart here. We're going to look at the 2-hour chart for the ES, the NQ, and the YM. So we're looking at the equity futures contracts. Why? Because they provide you and I, from a pattern recognition standpoint, with way better information than anything else we're going to find with regard to what's going on inside the indices out here, and especially the ETF structures. If there was just one gift that I could give to you, it would be the gift that if you're going to trade the indices and you want to really understand what the indices are doing, go get access to the futures data, learn some of these patterns, or really I just narrow it down to like 3 or 4 patterns. Learn these patterns out here, and they will provide you with all of the information you want. On the other hand, if you just want to base your decisions on basically 6 hours worth of data and leave out the rest of the hours that the markets are trading, well, then all I can say is good luck to you with that. So if we do take a look at the 2-hour chart here for these 3 equity futures contracts, you're going to see in the very top panel, you sort of see it. You can see prices have been moving higher, doing less relative energy. Wave number 7 is where we're at as we speak right now. You'll also see Stevie's red line, and prices found that as a support level. It's been finding a support level really ever since that bottom formed back on last Thursday morning out here. You'll see the NQ only in wave number 5, but it also has one of those price relative strength divergent patterns, which has sort of been confirmed. I say sort of because it happened, then no confirmation to follow through. Now we're getting a little bit of follow through. So what does that mean out here? We'll try to figure that out. The Dow, though, no, on that 2-hour chart, no real significant pattern that is in place here. No significant topping pattern. So it does have me scratching my head. You just saw me scratching my forehead. If they had the camera turned on me versus the chart, I hope they didn't, because the chart is a whole lot better looking out there. Now, we're in wave number 7. Now, this can extend itself. This wave ends at 2, so the next one will be 4. Then the next one is at not 6 exactly. But anyway, let's just take a look at where things are at as we speak right now. So it has the potential. It really does have the potential that we are here or we are near. But there are other elements that are just saying not so fast. Well, what are those other elements out here? If the market were going to crater today, then what we would see, I didn't cover this in the newsletter this morning, but because I was really waiting to see if, in fact, this is what we were going to see today. We would see the advanced decline oscillator readings for the New York Stock Exchange, the NASDAQ Composite, and the Dow. Those are the first 3 panels on my screen. We would see those get below 0 because yesterday they closed just above 0. They got to what is potentially the bullish side of the trade. Above 0, you're going to typically say bullish in its simplest sense. Below, it's going to be sellers. Now, that's not completely true. What do you mean? You just told me what it meant, and now you're saying not completely true. Well, the day that you see that level get busted, pierced, a close above or below, which such as yesterday, and we can see here in the New York Stock Exchange, that price the advanced decline oscillator reading was coming from below 0. And what you like to see, if it truly is what it means there, sellers are in control, right? We won't call it bullish or bearish. If we really say that it's sellers that are in control, then what today should end up with is that oscillator reading back below 0. And if it does, then I will say that today was the high. And if it doesn't, then we got to say fuck. That's the New York Stock Exchange. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So the end of day reading on the advanced decline oscillators for the New York Stock Exchange, Nasdaq Composite, and Dow are important today because if they close back below zero, says the sellers were always in control. Yeah, even on this nice move to the upside on this bounce, the market needed to be able to work that condition off. That condition being a spot volatility index that just was whacked out. It just was misbehaving, and you misbehave inside this market, you get slapped silly out here. So the end of the day is going to be more important out here. The volatility index, and I know there were many people who laughed at me when I said it's headed back into that 1040-ish area out here. The actual low so far today has been 1056. I hope you will cut me some slack there. Of course, remember, that was when I made that call when the spot volatility index was up in the 1559 area, and people thought that was headed to the moon. And I said, no, not so fast. That is not what is going to happen out here. But now calling 1040 or 1056, that is close enough for my workout here. But watch this. I think that this is going to be a key indicator at today's close. If you close above it, you close above that level, then it says, you know what, there's more upside move. It says, I don't care if I was looking at the 19th or the 22nd as the time frame when there could be a market top. Just simply says it wants to move higher. And it's at New York Stock Exchange. So we'll focus on that just for a bit here, because that gave us the great bottom or bounce signal. That was on Wednesday. That was when that message came. We saw a 46.38% increase in one day of the rate of change in the spot volatility index. There were some other things that went along. Not going down that path just now. But then 2 days later, on Friday, you had a minus, what was that reading here? Minus 17.87%. That being the green arrow on my chart here. You can look at all the other green arrows that I have on my chart here when you have that, and tell me, what do you see? Do you see failures out here? Do you see follow-through on the next day? You absolutely do. Do you see follow-through thereafter? In most of those instances, we do. I can show you one instance where we didn't. That was back here on the trading day of September 22nd. We saw a follow through on the next day. And then, in essence, that set up a short-term top. I was really leaning towards the S&P 500, the volatility index, everything just kind of falling into line right there. Now, in the S&P 500, let me switch over to a different set of worksheets out here. Let's just take a look at it. What would give us a signal that that might be the case? Well, one of those things would be if price were to close below Stevie's red line in the S&P 500. Now we're just taking a look at the cash indice out here. And you can see yesterday was a close above. Today was a test. So on that little retracement earlier this morning, what was the S&P actually doing? Just coming down and testing the red line, the Stevie red line that you pay attention to. Right now it's priced at 2394.33. So if the S&P 500 were to close below that today, the oscillators in the other three indices below zero, that would be an important message. Then I could say, okay, time to get out the umbrella because it may start to rain out here. At least what it would do is would give you a good enough indication where you could take a position. And if you were to see it close back above that line, you just say you'd call uncle real quickly and wait for the next signal out here. But right now, it's saying, no, I'm not going to give you that signal at 1:22 in the afternoon. And it hasn't. With regard to the markets and the way that the NQ has been trading out here, I take you to what was going on the 10-minute chart. So I know Tom is out of town today and traveling. I'll go ahead and fill in for him today at 3 o'clock. So in a couple hours, we'll get a better feel for what the market is going to do. We'll know at the end of the day, as you know how much I hate to say that, at the end of the trading session, where those oscillator readings are trading at. But if we just look at one of the tools that Tom likes to use, 10-minute chart here, and take a look at the NQ, the swing point low, actually, that was being tested took place between 9:50 and 10 a.m., 8,798 contracts. That was tested as we were coming down the air out here. I just posted it in the den, and this was between 12:50 and 1, 4,800 contracts. I don't think so, right? Not enough to bust it down. So couldn't bust it down. Now it'll try to bust it up. Now, at least what you and I also have out here, the blue lines, these are the blue lines that show us the 10-minute market profiles. So we should see the NQ bounce up to 57.02. If it gets above 57.02, if you can't break them down, you're going to try to bust them up. Here, you're just simply going to go to the swing points. Not much higher. 57.09 out there would, in essence, be the target. So 57.02, 57.09, is what the NQ has in store for it. Unless it decides to go ahead and bust through that 10-minute hammer candle that formed as it was testing. In this case here, you now have another swing point that only has 4,800 shares, but you'd really want that benchmark to be the 9:50, 10 a.m., 8,798 shares if the market is going to get rolling to the downside. And I'm not saying that it is. I'm saying it was right inside my wheelhouse as to the dates to be paying attention to, but we're just simply not getting the messages or confirming messages that, in fact, that's it. So we'll see the 57.0275 get hit pretty quick out here. We're only a point now away from that taking place. And that's the beauty of going ahead and measuring the volume on these swing points as well as taking a look at those TAS market profiles. So I hope that assists you in your trading and investing. What else has to happen today? Well, in the case of the New York Stock Exchange, because I'm focused on that because there are such good signals that can come from it. What the New York Stock Exchange would also need to do, so not just the S&P, would need to close below its red line, 11,570. Now, that would be a pretty decent pullback in this day and age. That's another 45 points or so to the downside from where it's trading right now. So it's not like it would be too hard to do, but that's what you would want to see in order to give us the signal, the so-called signal. And if we don't get that, what does that mean? That means don't jump on board. Don't punch that ticket. Don't get in the way. Stay long. All those things. Now, I want to make sure that you understand that what I'm not referring to are longer-term traders out here. Those of you that are trying to make decisions on your 401k accounts, just put your legs up on your desk, sit back, stay long out here. These markets are headed higher. Much. Did I say much? Much higher over time. So no reason to try to go ahead and time that and possibly miss out on something. They're in good standing as we speak right now. If it's going to change, I'll go ahead and signal that to you. But at this stage of the game, inside the New York Stock Exchange, there's no signal there. So that's an overview of the markets and some of the things that you ought to be looking at in order to give you the so-called sell signal. It's always nice to look at both sides of the trade. So in this case here, being short-term, long-term, short-term neutral, but intermediate term and long-term long inside the indices out here. It's always good to be looking at, well, what's going to get you to change your mind there? And that way you can pay attention to that. When those things happen, then you have some decisions to make. Otherwise, market wants to keep moving higher. We've got gobs of liquidity. You and I haven't looked at the high yield, which is HYG. Let's go take a look at HYG out here. See what it's doing. Man, look at that. Look at that. That is the iShares High Yield Corporate Bond Fund. It's a great tool to let us know when liquidity is drying up. It's not a dry county here in HYG. It's taken on its size. It's over its size from February 27th. Look great.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. A little bit of a conversation inside the Tiger's Den during that breakout there. Here's an interesting chart that I'm trying to get up on my screen out here. Let me just try to expand it here for you. Oh, I guess it is expanded. That's pretty weird. I must have too many things going on at one time, but it's really with regard to the question of supply and demand. The very basic. I don't know if you can remember your first economics class that you took. Some of you probably took that in junior high. I didn't get to that until I got into college, really. And so how is it that markets can go up on light volume out there? And the simple thing is, if you have, it's like anything in short supply, right? If there's something that's in short supply, the price will be bid up. You don't even need to have the same volume out there. And if I take a look at Apple, and because I'd mentioned the QQQ series, so I've gone back and I've got a file. I need to update that file, but at one point in time, a half a year ago or so, the trend was just so evident. I was like, this is why am I wasting my time every day updating this? Nothing has changed out there. Where I saw the total volumes of shares outstanding in the queues just drop substantially out here, so that you could see that the supply was dwindling. The float was dwindling out here. If you take a look at one of the top holdings inside the queues, you're going to see the same message out here. This is a history of the stock buybacks for Apple over the past 10 years out here. Now, remember, Apple went ahead and did a split and then moved into the Dow as well. So, when you see jumping from 936 million shares to 6.6 billion shares, somebody might say that doesn't make any sense. That was just simply because of the split inside of Apple. But if you take a look, just the last couple of years, this just got 2014, 15, and 16. What you and I know is Apple has increased their share of buyback, right? The last quarterly filing out here, they specifically said that they were going to go ahead and increase that buyback. And if you take a look, this is where yesterday I made mention. I don't know if I made mention. I think I did on the air. If not, I certainly did in the den, where Mark Fields went wrong. And I don't know if it was Mark or it was the board. Maybe I'll eventually find out. I'll be able to ask him. But, Ford did very little with regard to their buybacks. Did they do some buybacks? Yes. But did they do much? No. Did they do anything like Apple? Absolutely not. Their buybacks were like 1% per year. In the case of the buybacks inside of Apple, the actual buybacks out here as a percent, 2014, 6.5%, 2015, 5.7%, last year, 5.3% out here. So, and this year they're going to do, I know those have been declining just a bit, but that is a substantial buyback. And so you've got float that's coming off of the street out here. You can expect this to continue for a long time to come. Those of you that don't believe that tax legislation is going to be passed, that's okay. That's actually cool. You don't have to believe it. When it does happen, though, I absolutely want you to get on board with understanding what happens with regard to supply and demand and things going up on light volume and which way the stock market is going to head, because it's going to last for years. It's not going to be like a one-time. This is going to be QE on steroids. And I don't mean to get off target here, but this is so on target that it's so important. There is nothing more important to understand than this. Because if you are a person that says, yeah, I know the stock market's gone up, but it's been because of all this QE, all this money that's floated out there, and yeah, okay, great. The biggest, that's been over years. This could be unleashed. If you get the healthcare legislation passed with the tax ramifications that it has, and you get the repatriation, and you get lower taxes, and you get the subchapter S for the small business thing, we're talking it makes QE pale in comparison to what it is that you're going to see. Where do you think that money is going to go? And God forbid that bonds, actually we start to see interest rates rise, and therefore bonds themselves become no more of this 60-40 or 50-50 type plan that is in most of the wealth management funds that are out there. What do you think interest rates are going down or going up? Where do you think that money eventually flows? Look, we know that there's no direct correlation if the market goes down that bonds are going up. That's hogwash. Bonds go down because interest rates rise. That's it. We can go back to points in time in history, so many of them, that show that there's just simply no correlation between bonds and stocks. What the correlation is interest rates. So I just say, if interest rates are going up and bonds are falling, are you going to want to invest in that scenario? There may be reasons why you want to short term. I get that. But just think about, where's that money going to flow out there? So it's just so important to have that bigger picture. That bigger picture, way more important than me showing you a price relative strength divergent pattern or market profiles or seventh wave moves or anything along those lines out there. This just goes back to the long-term holdings, your long-term holdings out here. You're going to see a retracement. You're going to see a correction. You're going to see more than 10%. I can guarantee that one. I can't guarantee you when it's going to happen. I know the pattern to look for, but it's going to happen. You can sit through that. Well, if we get to the bear market stage, which is not present right now, the patterns of the past are not present right this very second. So do we have anything to worry about? I don't think so. What do you think? This time is any different? I don't think so. It's just not different. So we're going to get those. But on your long-term positions out here, the way things are shaped as they stand right now, what you should be doing is trying to figure out where is it that you can get some free cash flow to be able to stick into this piggy bank here, especially if we are able to get some type of decent correction out here. But even if we don't, you might want to start taking a look at adding to your positions out here. So a question, Danny, how much of that scenario is already priced in? Very little. Danny, have you priced that in? I would ask everybody inside the den, a group of active traders, okay? I would ask every investor that is listening on the phone right now, on their iPhone, on their phones out here, or everyone that is listening in, okay? Because I consider you guys to be very astute, very smart individuals out here. How many of you have put that into your thinking cap with regard to your trading decisions? So with regard to how much of it is priced in, very little, Danny. This is going to be a huge move, and it may already have begun to take place out here. It really may already have begun to take place out there. That's why, Mr. Z posted in the den, is it possible that the NDX 100 will get to 9,600? By the way, it's trading right now at, and there's one of our most astute traders out there, right? So he's asking the question, posing the question. He's not giving a prognosis. It's trading at 56.97, but, can it get to 9,600? So I would have to say very little of it is really priced into the market out here. So just open your mind to that possibility, and all will be well out here. Now, what has been taking place over the past couple of hours, a bit troublesome, both for folks that are long gold or long bonds, and we'll have to look at it when we get back from this break so that I stop, bloviating over what is probably the most important thing for you to understand and think about, pattern-wise. QEs 1, 2, and 3 are nothing, pale in comparison to what's coming next. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 42. S&P is up 4 points out there. And if we take a look at the problem inside, potential problem inside of gold, we saw a little bit of a pullback. Same thing in bonds. It is the yen. So let's go take a look at the yen. Let me get that up. We're going to look at the currency pair out here. There's a 15-minute delay, so we can switch over and also take a look at the futures contract for it. And we'll do that. Just with regard to the profiles, I think these are the more consistent and better ones. So if you're looking at the left-hand side portion of my screen, here we can see that the yen was moving higher, was actually weakening. That's why the U.S. dollar index, one of the reasons why the U.S. dollar index was getting stronger. So in this chart here, when you see price moving higher, the currency pair, the yen is actually weakening. The U.S. dollar is getting stronger. Well, gold performs better when the yen gets stronger, not weaker, meaning it should be moving down when we take a look at this chart here. Now, the interesting thing on the 60-minute chart, and the cool thing about having these 4 panels that we can look at, is you and I had already drawn in a trend line. We had drawn in a trend line that the yen had busted through, in essence, the week of May 8th. And then last week, it came right back below it. So when you break a trend, what you like to see is you like to see a test of that trend line. So you can see that a little shorter-term trend line in here. And it should hold. Well, it didn't hold. Now what we saw today, that little bounce that we saw, was doing nothing more than now testing that trend line once again. So it may be that was just a one-hit wonder, and it may all be over. And what you want to see is you want to continue to see this currency pair pull back. When we take a look at this currency pair, then price did nothing more than go test a resistance zone out here, and then that would be okay for gold and silver. If that's not the case, price breaks above that trend line. Price inside the yen breaks above 111.78. Also, we saw a test of the bottom of the daily box, and then gets above 112.04, well, then all holy heck is going to break loose in Goldilocks Village and Silver Village out there, and price will pull back. Now, pull back to where? That would be a good question. The pull back to where would be, and I got to switch charts again here, workspaces again, because we can look at both at one time, and that might be the easier thing to do. Of course, I could waste time and just look at each one individually, but I prefer not to waste time. Why am I wasting time? So here, this is interesting. I'm glad I actually brought this up. Well, son of a gun. Let me do this here. I'm going to get rid of the silver lines out here, but we're not going to do that inside of Goldilocks. So let me do that. Say, okay, we're good. Okay, so And this is really this is great. This is cool. Thanks for even asking me to bring this up. Now we're looking at the June contract. You're saying to yourself, I didn't ask you to bring that up. Yeah, you did. So if we take a look at the June contract here for gold, the top panel of my screen, and then the second panel, which is the price oscillator. See how that price oscillator is still below the zero line? But price got above Stevie's red line. That's the oscillator and change line. So when price is above, it says at bottom, that price oscillator is turned up, which can be either counter trend, rally, or could have been a bottoming signal out there. And now what we saw here today between the yen and gold, we saw this little bit of a pullback. So these three lines are meaning the price oscillator is going to should get to the zero line. Now, ideally, what we see is gold just kind of chug around here for the next day or so. You may not like to see that, but you'd ideally like to see that get to zero, all three of those lines come together, price come back and test that little cluster, you heard me, cluster, or Stevie's red line, and then bounce off it and then move higher. That would be the all-out signal to back up your truck. Don't back up your truck. Make sure you use prudent trading strategies out there. But to begin to, would say that would be the bullish signal inside of gold. Where can a pullback take you to? Well, it can always take you back into the red line. In the case of silver here, if the yen has a mind of its own out there, decides to break back through that trend line, continue moving higher out there, then silver could come back and test 1661. But that's not the message as we speak just yet. But I want you to be aware of it so that you can give it good, so that you understand what's going on inside of the market. That way, depending on which side of the trade you're on, you can really anticipate it. So right now, the setup for gold is it's behaving the way that you would want it to if you are a bull. You don't have the test, but if the test comes and gold passes that test, then that would be very bullish, and probably the A to B equals C to the upside would actually occur. So that takes care of gold, silver, and the yen out there. Now, there was a request. Don sent in a nice email, but Don, it was really hard for me to see on this little screen out here, my little Apple screen, but I could see, and he sent me a chart, so I'll review that after the show. So thanks for providing all that information. And I can see that the ticker symbol is LABU. So let's go look at LABU. And it's best for me not to look at your charts first anyways and just come up with my own conclusions. Maybe they support, maybe they don't support what you are looking at. So if we're going to look at LABU for Don out here, I would be looking at it with a couple of different tools. But let's first, I just want to change workspaces again. So if we just take a look at this chart out here, one thing that Don did have written in here is a big rising trend line. So I'm going to go ahead and borrow that from Don. Well, I'm going to try to borrow it from Don and pulling this thing back. So this is, by the way, the daily direction S&P Biotech Bull 3X out here. So, of course, this is all reverse splits. This ETF never priced out, I doubt that it ever priced out, at 239.28, the high from July 20, 2015 out here. All that was done through reverse splits, I'm sure, to get back there. But that doesn't make it here nor there. But there was a trend line that Don had in here. I'm imagining it is this trend line here coming off of the lows from November of 2016. So here is a trend line, and I'm going to guess that is where you're looking at. And what this does show is that right now the LABU is trading off that trend line. But this is really trading, since it's a triple out here, it's really trading off of the IBB, I would presume, right? So we'd have to go take a look at the IBB and see what its trend line looks like. And this would actually be, I think, more important trend line to be paying attention to than the triple out there. And if we take a look at this, what's interesting is that trend line has been broken. Now, I didn't know any of this before we did it, but I would say that in trading LABU, you don't want to disregard the IBB. Now, maybe LABU is not an exact replica of the IBB. I don't know if it is or it isn't, because I haven't traded that. But if it is, then, and if it isn't, I apologize for all this crap that I'm feeding you. But actually, it's good exercise anyways. When you trade those triples, make sure you know what when you trade anything, make sure you know what the underlying instrument is. Then go to the underlying instrument, in essence, and see what the patterns are on it to help you confirm the action that you should or shouldn't take out here. But trend lines like you and I looked at inside the yen out here, we can see that the IBB broke through the trend line back here, just slightly back in. We're going to say that it really broke right here, right on May 17th. And it's broken it. Price has gone up and it's tested it, which is right here on May 19th. So far, it's tested and rejected. The LABU, which is in essence replicating this on the 3 times, if that's going to move higher, you really want to see the IBB get back inside its trend out there. That's the first thing, Don, that I have taken a look at and see on LABU is let's make sure we know what the underlying instrument is, and I believe it's the IBB. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So I did a quick search on that break there, and it's actually not the IBB. It's XBI is the S&P Biotech ETF. That's the one that the LABD is being traded off of. So that's one that we want to go ahead and take a look at. So this is the XBI that I've got on my screen. Still does the same thing, right? It shows that the trend has been broken out here. And if we take a look and turn on its TAS profiles, this will help us just understand some other horizontal lines of some support or resistance. We just take a look at the daily out here. What you want to see if this is going to, so you can see that there's a brand new box that formed out here, a daily box that is formed out here. And price for the most been trading below the low, which is 69.57. The top of that box is 71.91. So, like I said, I didn't read your email, Don. I will. I'll respond back to you afterwards. What would be my take on this? I see the series of higher lows, most certainly, and I certainly see the higher highs. Right now, it is trading underneath a significant level of support. And until it regains that support, looks like price might want to head down to about 67.01 to 64.78, which doesn't really take away from the higher lows, in essence, that it is forming out here. So that is on XBI, which in essence is really how you would trade the LABU and LABD, in my opinion, out there. Okay, let's go take a look. I have another request to go take a look at ticker symbol PPL. Mm-hmm. And so let's go take a look at PPL, see what it is doing. PPL is PPL Corp. So no idea what PPL does. Volume-wise, several million shares a day out here. So let's go take a look at it. First, I'm going to leave the profiles on. We'll go turn them off. This is for, who is this for? This is for John. And so, John, and your question was, can you give me your expedition symbol, PPL? What would you like to see at the swing high it is approaching right now? So PPL, I got the right ticker symbol, approaching a swing. Let's pull this back. Okay, so what John is asking about is all the way back here, the trading session of June 21st, 2016. We might want to pull it back even further. What PPL, Penn Power and Light, thank you, Z. 621, the swing point high, volume of 3.6 million shares. And you like to see 3.6 million or more shares as price moves into that level. Today you're 1.4, so it's not going to be near that 3.6 million shares. The bottom of that swing point happens to be 39.44, and you are at 39.44 right now. How the heck did that work? Man, that's pretty. Now, we've seen a higher high today, but it happens to be trading right at that swing point. Now, that doesn't mean short the the living daylights out of it. Doesn't mean short at all. Just what you asked, what I would like to see. You'd like to see volume coming into that swing point. Yes, it is making a 100% move of a move. Yes, it's going against a downdraft, a supply line from way back in June 24th, 2016, where there's 16 million shares to the downside. But we don't have any other signals out here. Let's go ahead and put it on my other set of charts and tools. See if there's anything else that shows up for PPL. Maybe a Tom DeMark sequential count, maybe a price relative strength divergent pattern, maybe something out here, and maybe Stevie's red line. That's the daily. I'll put the daily chart out here. We probably ought to look at it on a weekly chart as well. Price is stretched, meaning it is moving higher, doing less relative energy, but it's traded above my red line of 39.07, so that's pretty good. There was a TD sequential count a ways back. That failed. Nothing more bullish and failed bearish pattern. A TD combo count 2, 4, 6, 7, 8 days ago or so. At this stage of the game, that too has failed. PPL. Looks pretty good to me, John, but it may get a bit tired out there. See Rhodes with TFNN. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.